Warriors, who's ready for battle today? How you doing, General Blake Morrow?
Hey, good
Scott,
morning, Coach.
hey, buddy. Scott,
Morning.
hey, Stel, I know you're here. Stelios back on tour here in Face, the reunion tour. Scott Williams, correlations. We've talked about correlations after the red sweep. Uh, Trade each individual instrument like it's on its own. It'll work for you for now. Ryan, good to have you back. Hope you're not having any flashbacks from the concert. And RJP, how are you?
Well, mate,
All right, so K-Man's here, got full house. Uh,
Alrighty,
okay.
hi, Coach.
Hey, how you doing? How you doing, K-Man?
Yeah, very good, thank you.
Good. All right. Marcus Thompson, new name. Welcome to Face. All right.
No, I've seen that name before. It's been
Yeah.
yeah,
around.
he's a roomie.
Marcus is
Yeah.
in our room, yeah?
Oh, okay. Well, see, wait till you're my age. Anyway, you'll get used to that. So anyway, I thought I'd start with the SPOOs. Okay, so NVIDIA didn't do anything great after earnings, but it's coming in sharply higher. See that? We're up about 4 or 5. This was the earnings candle right here. So we start taking out 36, you could start talking about attacking this high, which will take out the downtrend. But I just want to show an analog between S&Ps. First of all, here's Bitcoin. It's bouncing. But, I want you to pay attention to the 4 hour here, this descending triangle, okay? So, what we have going in S&Ps, I think you have to be aware of that besides the false breakout here, we're looking at the same type of formation we had in Bitcoin. So, we've attacked this 5,900 level three times, okay? Now you could just ignore that this happened. All it did was get me to cover my shorts this week, and then I had to get in later on recommit on Friday. So anyway, it's the same scenario where the measured move is 720 if we take it out. I think this is a damaging wave, and that you should be looking for retraces, and not big retraces. I don't think we're gonna get 78.6 or anything here. And NASDAQ, kind of the same situation, false breakout at support. I don't think NASDAQ does much better than 21.6. We have a big weekend with tariffs coming up. Uh, President Trump's not in a good mood. He's mad at Apple. Um, I, I'm short Apple through puts and yeah, just technically I did it. The news, if you just trade your technicals, um, you know, I was planning, and this was the strongest thing during the crash, okay, during the meltdown we've had, or whatever you want to call it. And then it's finally given way. So we've taken out one support level and around 235, but I'm looking for something like this. Like this was wave 1, and this is a 2, and we're headed into 3. Looking for 180. Anyway, I'm going to bring Stella in now because um, the gold silver ratio is turning for you today, buddy.
Yeah, it's still high. Let me take the screen and I'll take it
Okay,
one
I
thing
already
by
let
one.
you. You didn't even have to ask me. I'm a mind reader, so go ahead. All right, so wow, what do you think? Can we get
So,
a bounce here?
it looks like it. I've been talking about yields and how I think they're going to be resolving to the downside. And if you've been in the chat room, I've posted this chart quite a few times in the past couple of weeks, saying that 440 was really the level that needed to hold. As soon as 440 broke, we went 10 basis points in a day. And Now we are kind of bouncing above this 200 DMA. I still think this, we might bounce a little bit, maybe even back towards 440. Why not? But I think this will resolve to the downside. This is remains my core view. I don't think yields are going to stay low forever or for a long time, but I think that the market is really not positioned for this. It's still very short. CTAs, I was reading a report yesterday about CTAs being still very short bonds, and they are getting now triggers to cover. So I think the path of least resistance is for bonds to go higher, so yields to go lower, and I think that this will continue. And I think ultimately we're going to be testing these lows at 360 or close to. But for now, we are bouncing a little bit. Nothing changed in my major view, so that's what I think about the 10 US. Gilts are very interesting as well. I think gilts are even better looking for longs because I think the UK
Yeah.
economy is really not in great. Well, which economy is in great shape? None of them. But I think even though we have higher CPI than expected, higher wage growth than expected, yes, in the short term, I think that rates will be going lower if we look out on a, say, 12 to 24 month horizon. So I like gilts to the long side, especially if we manage to break below this kind of confluence of the 38.2 retracement and this kind of minor ascending trend line around 447. We're close. If we break that, then there really is only 438, these lows here, and then it's goodbye. It's a bit like the 10-year US after that. So I like
Okay.
both to the long side.
Okay.
Of course, technically, we might bounce here gilts as well. We are getting to this retracement. Of course, we might bounce, but that's
Stella, if you keep it on gilts compared
yeah,
to what you saw in the 10-year, look at where the RSI was at the high in the UK bonds. So that was a
yeah,
confirmed high
it
compared
was.
to. So it is
Yeah,
possible. This was barely confirmed,
you are
but
right.
that yeah, I'd be it looks like we could challenge that again because of that. I've hung my head on confirmed highs and lows um, for quite some time. They're even more reliable than three drive divergences for turns. So
Yeah,
I try not to fight confirmed highs. I kind of say, well, it's a high, but may not be the high.
yeah. No,
Just,
there's always a chance. I just think that the market is really not positioned for higher yields, and I really
yeah,
do think that in the
yeah.
next coming months we're going to see lower yields. Well, of course, I could
Well,
be wrong. I've been wrong many
it
times
does.
in the past.
No, and you know what it shows that confidence in gilts are much lower than confidence in notes and bonds because of the structure. It's not relenting on rates like we are here in the US.
Yeah, yeah.
So that's your relative weakness. Anyway, I'll
Yeah,
shut up.
no, it's valid what you're saying, and thank you for all your comments. They've always been really great, and I don't think we say that enough. So thank you, Coach, for that.
Oh,
Um,
thank you,
so
buddy.
let's move on to. We're gonna move on to metals afterwards, but stocks, because everybody keeps talking about stocks, Nvidia and Apple and all that.
Yeah.
My view remains, yes, momentum is waning, but we are still in an uptrend. For me to
Yes.
say that we're not. I mean, we really have to break below 5680. The highs here, which will make a new lows. New lows is actually below 5700, but really after that, this will be confirming the break below the moving average, everything. So 5680, which I know it's a long way from here, but above that, I'm still not convinced, and dips keep getting bought. Yes, it's less forceful than it used to be, but dips keep getting bought. And let's not forget, when yields drop, this is usually a tailwind for equities, unless of course yields are dropping because there's a massive disaster like in 2008. But still, the trend is still there in my opinion. And I don't want to jump the gun and try to short something which, if you've been shorting it for the past year or two, you get burnt every time. So that's my view on the S&P and equities. And unfortunately, I'm saying the same stuff over and over again. Um, And talking about equities, we have to talk about the biggest kind of risk correlated asset of the recent times, but they are underperforming now. So cryptos are not doing well. Bitcoin is down, what, 20% from the highs, even though equities are only down marginally. So there's been some liquidation. Um, we
Holding
are,
at 200. Yeah, look at
yes,
that. Yeah.
holding the 200, and Ethereum is doing really badly. I mean, Ethereum is looking dangerous because we are now, this trend line. Look how nicely technically this has been trading. This touch here was on the trend line, and we're getting close. And again, I'm not a fan of cryptos. I don't trade them. I understand some of them or some of their use, let's say, but if you call it a store of value, I will disagree 1,000% because you cannot drop 40% from the highs in 2 months and say that it's for store of value, or 20% for that matter. So store of value, they're not, but they're an amazing speculative asset, and kudos to the people who trade and make money. Um, we have
I
to
know
talk.
that you bought your girls a couple fart coins so
Yeah.
that they could put it on the kitchen table when
Oh
you're
man,
eating.
don't get me
Dad,
started with all these
Daddy,
coins.
Daddy, here's the fart coin.
Don't get me started with these
All
things.
right.
So talking about store of value, well, gold, of course, is turning a little bit from the highs, but again, what does this look like? This looks very bullish to me.
Yeah.
Really, we need to see if we can retest these previous highs at 27.90. We're about 100 bucks away, but as long as yields keep dropping and the world doesn't, go to hell in a handbasket, I don't see how this will be dropping meaningfully. And there's all sorts of talk about auditing the Fed and central banks still buying gold, physical gold, like there's no tomorrow.
Auditing
So
Fort Knox.
yeah,
Yeah.
there's a lot of conspiracy theories behind gold. I'm not going to dwell on those, but it's just a hard asset that I really, really like. But having said all that, with the gold silver ratio at 90 and change,
Look at that divergence.
yeah, and look at
Look,
that. I mean, we're
look at
still
that. 4 drives to a top.
for 12 drives to the top. Yeah, I mean, it is struggling up here. And if you go back historically, I mean, the average of the past 20, 30 years is what, 60, something like that. So we are really extended in this ratio. So whenever this ratio is here, I will always prefer silver and platinum, but I will prefer silver. The problem with silver is that it's kind of in no man's land at the moment. So it's. This really big channel that's been working for the past couple of years, we really have to break above the previous highs,
Yeah.
33.40. So we're in the middle. So, I am slowly accumulating. I have a core long from 23.10. People will be bored of hearing me say this. And I have another long from 32.42, which is underwater. But, I have lots of space to play with. And I'm going to do one more ad if we get towards 31, and then see how it goes. But I use very little leverage, so I'm comfortable with the risk I'm taking. Of course, this is everybody trades the way they want to, but that's what I'm doing. So one last thing I want to show. Okay, we talked about yields. We have to talk about the Dixie. I do think this will resolve to the downside as well, and I've been saying this when we're up here. I think we will test this confluence around 105. Of course, what happens there is a different story. But once we get there, which I think we will, I'm going to review fundamentals, review techniques, everything, and then decide which way I think it's going to be going. But for now, my bias is still bearish on this. Um, and the other thing I really want to show is oil, which has been um, grinding lower. I've said before, I think we're going to test these lows, and I think eventually we're going to resolve lower. We're going to break lower. Let's not forget, Trump wants cheap oil any way he can get it. There's going to be more drilling. There's going to be agreements, and with the Ukraine, with the Russians, with everything he can do to get oil lower. Because let's face it, oil is a driver of everything at the moment in terms of energy. Still. Until nuclear takes over, which is being resisted by quite a few countries. But let's not get ahead of ourselves. For now, oil is still the driver, and low oil means everything is easier and cheaper to make. So I think this will be going lower in the short term. I think we break lower. After that, again, I don't know, but this remains my view. The good thing with oil is with this zone being so clearly defined, if you think the opposite, well, you have a really nice entry area and you know where you're wrong. So I like it when that happens. You know, when the chart is very clear.
Yeah.
That's it.
Yeah.
I don't want to take any more time.
So get long as close to a breakdown as possible. Get
Yeah.
short as close to a breakout as possible if you believe in the trade. So
Yeah. And
yeah.
know where your stop is. Okay,
Yeah.
you know, stay disciplined. Give your stop a little bit of breathing room. You've said this many times, Coach. With all the algos trading nowadays, you know, it's going to be a stop hunt every day, all the time. So give your trades a bit of space to breathe. Trade, size accordingly if you have to, and stick with your conviction and stick with your stop loss.
All right.
That's it
So,
from Uncle Stelios for today.
okay. Okay. Trump just reversed his course on Venezuelan oil, whatever that means. I just saw that. So, anyway, let's get back to the boys from England. All right. So let's start with Ryan. I know your ears are ringing, but your eyes are fine. Blake has put out a big trade coming up in Euro. We'll wait for, what he tweeted out there. What are you thinking? We tried a new high again yesterday in both Euro and cable. Neither of those highs confirmed. It looks like they, stop hunt maybe. So here's this uptrend line that Blake has. It has some kind of triangle. 104.50 is not going to look so good, is it? Under 104.5.
Yeah, it's that 105.30 on the nail again.
Yeah.
It's turning into quite some level. And we couldn't hold the 105 either. So that was important as well. Yeah, we got a tight range, 104.50, 105.30. I was saying on the flow show this morning, when you get big levels like that, I'll be looking for a break trade through that 105.30. But I'm cautious because there's a lot of traffic just above up to 106. We've got some fibs around 105.50 and 70, big fibs as well of the recent trends. And then the 106 resistance that was sticky for all that time. So if we get a break up, I think it's going to be a slow process. There's more chance, I think, of seeing a bit more legs if it breaks down. But if it gets under 104, then we could be heading back to mid 103s, maybe even low 103s.
Yeah, look at this, 102.5 or so. You know how sometimes trend lines get retested. I mean, that would be like setting up a triple bottom or something if we get there. If we have a dollar rally, and do you think like tomorrow, what's the market looking for on the PCE, Brian?
Probably looking for numbers. I don't know what the expectations are. Probably looking for numbers that are a little bit lower after the PPI data, because some of the components that feed into PCE from PPI were a little bit lower, even though it was sticky. So yeah, I think the market's going to be looking on the lowish side for PCE, which obviously leaves the price risk if it comes in hot.
Right. Okay. We're getting a little bit of a bounce in US dollar yen. It looks like I don't know why I had this black line there. Probably have to go back, and it must have been an important area. Was 48.5 a big area for you, Ryan?
48.80.
Oh yeah.
Was
Okay,
the area for me.
this is why. Okay.
Yeah.
Look left. All right. So what a great place to maybe rally one more time before it cracks it.
Yeah, those rallies are looking weak though. We had the break of 150.80, which then held after. We've had the break of 150. That's holding on rallies, but we can't get under that 148.85 and hold it. So something's going to happen soon. We're either going to break up or break down, and if we break down, we're probably going to be 147 pretty quickly thereafter.
Okay. So are you keeping powder dry for the PC tomorrow? I mean, does it make a lot of sense to, do anything in front of the PC unless you're just day trading today.
Yeah, I think if anything, for data at the moment, because we're constantly trading headlines and geopolitics and whatever, you've got to take these data points as just a snapshot. So if it's hot and you get dollar yen rallying, it's done nothing but be a rally seller all year. So if you get a decent rally on the data, you've got to perhaps look at that as a fade, and the same thing for any other pair. If you get another rally to 105.30 on soft numbers in the euro, you might want to think about having a go. So use the data to see if the price gets pushed out of sync with whatever the trend is of the day.
Thanks so much, Ryan. You're
Cheers,
really you're a rock star.
Well,
No,
compared to you,
I mean a groupie.
a roadie.
Oh yeah, I always wanted to be a roadie.
I'm backstage drinking the beers.
Yeah, what a lifestyle those guys had. Anyway, Kay, how are you today, buddy?
I'm fine, Dale. I'm fine. How are you?
Good. I'm doing okay, and they say any day you're staring down at the grass is a good day. So, any conviction with
Um,
the board here?
I'm keeping that smaller long. I started again yesterday, a smaller long on the Aussie, but I mean with loads of room to add if needed, or if warranted rather. I also like sterling still, so a little short euro sterling and a little long
Yeah,
cable, but no big conviction trades right now. I'm just going to not disagree, but maybe give a slightly different view because we just had little blips there on the currencies when it's Hassett, right? Kevin Hassett
yeah,
came out saying that there's a study coming out on tariffs on April the 1st. Trump will decide what to do about the tariffs after that. That to me, it is well, I mean, pushing back any strong
another
decision,
month.
which to me means that we can look at the numbers for a while. We have central banks coming up, we have a bit of data coming up, so perhaps the market is going to trade a few data after all, whilst we're waiting for the orange hurricane to come up with what he's going to do with tariffs.
Yeah, because that's not in the market. Everyone's expecting it in days.
Mm.
And you're saying he might put it off with Canada, which is a big deal, and all of these tariffs until April.
Yeah, but the reciprocal tariffs will wait, but perhaps on Canada and Mexico it will make a decision earlier. Because Scheinbaum is going to Washington, or at least planning to go, sorry, to Washington
Oh,
around next Tuesday or so. But yeah, I mean, for the rest, yeah, high conviction trades are a
hard to
bit
come
tough to
by.
have. I think we can get down to 420 or so on the tens. That is still what I'm viewing as neutral. And once we get there, then we decide what to do with them. And the bond market will continue to monitor. We also are still end of month. It's been subdued. That's the least we can say up to now. I think people are hedging much more dynamically because of the uncertainties surrounding tariffs and wars and stuff. But yeah, we can still see some rebalancing in bonds and equities before the month is over. Um, I fully agree with Stel as well. Setbacks, short-term setbacks on the equity markets can still be seen, but the big levels are still there to be retested. Same thing on
Well, yeah. Here's the bullish count in S&Ps that this was the beginning of 5. All
yeah,
right, so it's 1 of 5, and this was like ABC for A, and then
yeah,
B, and then C, and here, and then you're ready for
yeah,
3 of 5,
yeah,
which takes you to 63 or so,
yeah.
64.
And look where that those dips or drops, however you want to call it, held 59 around 59 59.20, all
Yeah,
around there. I think it's the 61.8 of this year's range. and that is your first level then. And then if you start to get back down there, and then we're probably looking at the levels that Stelios was showing earlier. But in the big scheme of things, nothing's changing, right? Not yet, at least.
Yeah, we just heard the thunder.
Yeah,
So
I mean, and thunder may
fade away.
may morph into a storm, and that is all possible. But
Yeah.
in this day and age, I prefer to wait for it to really hit and happen before trying to front run something, because similar thing you were talking about the yen. I mean, there's a very big euro yen level in at around 155.5, 156. And we've tried and tried over the past days, and it is still holding. I think what we're seeing here is partially, I think, month-end flows, because they were calling for euro yen to see sellers. We do see those sellers every time we bounce over 157, but we have to admit and also note that the 155.5, 156 in euro yen is holding right now, and those are the things that I'm watching for the time being, Dale, and
Okay.
we will see when things break.
Okay. Tomorrow's a big day. Blake, we have some time, bro. You want to talk about the Euro trade that you went public with? Can't hear you.
He's muted.
You're muted, buddy.
Hello, hello.
There you go, buddy. You're good
Can
now.
you see? Okay,
Yeah.
you can see it now. Okay. So anyway, the euro slipped from resistance. Now, I have to admit, holding up pretty good. You know, whether it's end of month flows or what have you. There's that trend line. That's the wedge that we were discussing. We just have to keep in mind that, you know, long term, any move above 105.30, you have and what I was hoping would happen, and it could still happen, is any move just above those highs is going to hit the 38% retracement. So I've been looking to get short, and I've been talking about it for the last week on the week ahead video. I've been looking to get short, you know, on a spike above this resistance at 105.75, basically 106. While it's below 106, I still want to be short. If we get above that, then I think the dynamics change quite a bit, and there's something that more to the story, if you will. But my 2 cents has always been, let the euro rally into resistance, because Trump is going to go after Europe at some point. So that is, and he kind of showed his hand a little early yesterday. I thought it would be more like a week or two from now. So anyway, needless to say, we're still in this wedge, and it's really, really, really tight. And if we start breaking, like you pointed out, we break below 104.50, it's going to look a little ugly. Now, overall, I do want to be long the euro on a dip. If we get a dip towards 103, 104, I don't know. You know, we see some sort of retracement. That's where I actually want to be on the long side. So any which way you play it, which way you break out of this range, I'm actually looking to fade it on a breakout of the range. So whether it's a move like this, you know, above here for a short, or if it's down below for a dip, you know, be long down here or short up here. That's the way I'm looking to play it, and I'd play it outside of the wedge too, for a squeeze or a breakdown. Whatever happens first, I'm really I'm going to be a little ambidextrous in this environment. If you guys have been in the Forex Analytix chat room, you guys know I'm out there scalping around like way more than I normally am. Here's an example of shorting the euro yen and the dollar yen this morning and taking some off already. So I'm not sure why that happened, but anyway, let's go over. We got the news coming out, so I'm gonna pull up the data flash, and we have a bunch of data coming out in just a second. Let me see here. We've got just 15 seconds. Let's get the charts up here. That's not what I wanted to do. Let me pull up the dollar. I'm gonna miss it. my charts are stalling here. Give me a second. Here is the data. Oh, data should be
Durable
out.
goods.
What is
Strong,
it?
strong durable goods.
Core
Look at the
lower.
jobless
The
claims.
headline is higher.
Yeah, and the jobless claims, you know, that's some data that that's going to be getting the market's attention.
Core PC price is higher than expected, though.
Taking
The
yields down.
dollars coming down, yields are coming down, S&Ps come off. I mean, one of the things that's going to really worry the market is, and this is there's your data flash, so you can kind of see all the data that's out. You know, this labor market is it's going to be a problem, and it's going to start to show it's going to start to show up soon, and we've been talking a lot about that. So watch you know, that data, and remember, you know, you look at GDP, the prices, yeah, that's also backward looking. And the durable goods orders, though, that's a pretty strong number. Well, how are you reading this data, Ryan?
Yeah, we can sort of forget GDP because it's a revision, isn't it? But the rest of it, yeah, the durable goods is okay, although that, as Stel says, the core's a little bit soft. Initial jobless claims, a little bit of a tick up, but we're still in that 200 range. So yeah, nothing bad here yet.
Remember, the initial jobless claims is the most real-time labor data that we get every single week, and so that tick up is actually a pretty aggressive one based on what we've seen near the 210 to 220 level for so many months. So that's going to have to be watched in the weeks ahead. I think that's going to be something that the market's going to be paying really close attention to. And so, anyway, I think that everybody needs to just keep an eye on that. Month-end flows are going to be dominating the next probably 24 hours, but don't forget 24 hours from now, we have PCE data, and that's going to be probably the ultimate market mover of the week. That's what everybody's waiting for, and we're going to be covering it live right here on the F.A.C.E show. So make sure you guys are around for that. Stelios, it was nice to hear your voice today, and having Ryan and K-Man here. Thank you guys. And Dale, I know you have Angie, the goddess of grains. She's here today, so I'm going to pass it back over to you.
Yeah, it's kind of like having royalty in F.A.C.E.
That's right.
How you doing, Angie? I'm trying to promote you. You have to go for the promotion. There you go.
Here she comes. All right.
Thanks, Blake.
All right. Thanks, Coach. Thanks, everybody. Thanks for being here.
Okay, everyone. Angie Setzer, goddess of grains. Angie, God, a lot has changed in 3 months since we last talked. I think we were talking about the bottom. Corn was bottoming then.
Yeah, I think we had discussed that. I'd have to say we were one of the, I don't want to say one of the first ones. I never like to be like, oh, we nailed it, but we definitely had discussed a couple different times where we were really working to carve out that bottom in corn, and we for sure had. We definitely saw a nice rally, and now we kind of have exhausted some of that and are just kind of sitting here, I feel like in consolidation mode, maybe a little range bound, trying to figure out what comes next when it comes to South American production and what we see here in the US for new crop.
Yeah, we were here, Angie. It was in August, wasn't it?
Yeah, I think so. Yeah.
So we're diverging here, and everyone was pretty depressed. And what a move! I mean,
Yeah.
it led the way, followed maybe by wheat, and bringing up the rear. Well, I don't know if it's a rear anymore. That's pretty healthy consolidation in the beans
Yeah.
here. All right, so let's talk about the drama in the bean market. So the beans got real excited on their Chinese buy,
Mm-hmm.
right? That kind of
Yeah.
lit it up for, oh, they're coming back. And then
Yes.
I think a week or so ago, they went back to Brazil to buy their beans.
Well, it's not even, I mean, and seasonally they should. So, just to kind of point out, yeah, we had a little bit of excitement here the third week of January, right after the inauguration, where I think we kind of undid some of the biggest worries that we had when it came to President Trump and agricultural trade. I think a lot of the conversation had surprised some folks with the administration officials that he had tapped coming in and saying, yeah, hey, we'd already sorted out this deal. We'd already negotiated a resolution to the trade deal. We want to revisit phase one. And so there was a rumor not too long after this whole revisiting phase one deal, where we would, someone had said, or the cash trader, the conversation in cash trade, was that China had come in and was looking to purchase a couple 2 to 3 million metric tons of soybeans and a couple million metric tons of corn or whatever. We haven't really seen that come to fruition, but there was a thought that, hey, they're going to come in and throw us a bone here. And we saw a bit of a rally. On top of that, though, at the same time, we had seen South America turn dry. So we saw some issues start to develop in Argentina, some issues start to develop in southern Brazil. And, we basically took the crop size estimate in South America down. We were talking numbers of upwards of 250 million metric tons out of the whole of South America. That had
Yeah.
been 20 million metric tons higher than what traders were talking initially, 800 million bushels, give or take, a little less than that, but still. It was a big amount of beans that folks thought were going to come back into the market. It turned dry. We turned dry. They went away. We, kind of saw some excitement over China. We spiked. Now the weather has kind of switched back. Harvest is happening across much of South America. We haven't seen anything develop out of China. And here we sit waiting to see which direction we need to head next.
Yeah, I was reading about some type of disease. I know it's not blight, but it's affecting the wheat crop. Can you tell us about that?
Yeah, I mean you'll see, or there's winter kill. We have a conversation about winter kill, just about every year. I think that was probably where you saw wheat, really get a shot and take off higher. March wheat, front month wheat had traded right around that 5.25 area for quite some
Yeah,
time.
but
And then yeah,
but
go
isn't
ahead.
there a disease affecting the wheat crop?
No, the thing
I
is
read
about
about it.
wheat. What was it? Do you know? Was it stripe
I
that
don't.
they were discussing, or?
It may have been, but it was concerning,
Mhm.
especially with supply situations. So
Yes.
anyway, it's not my wheelhouse, but I do recall
No,
reading
yeah.
about it. Yeah,
Well, there were some pretty significant worries here a couple weeks ago. It was part of the reason that you saw the wheat market spike. You saw a recent run up in value in wheat, and there were some worries you'd see some winter kill. We are hearing some reports of different things as the wheat crop comes out of dormancy. The thing
yeah,
that I'm going to say right now that we have to be careful of is we are going to see some pretty, and that's part of the reason they took the winter kill risk out of the market, is that we are going to see temperatures warm pretty decently here, and that will wake up the wheat crop. Part of the reason that the market, there was some real concern that the cold temperatures were going to hurt the crop. But if
yeah,
the crop is in dormancy, which is what happens with winter wheat, you plant it in the fall, the weather turns cold, it basically goes to sleep until spring, and then once the temperature's warm, it wakes back up and starts growing again. And so the idea that we would have had winter kill a couple of weeks ago was a little questionable, simply because we were still in dormancy across a good portion of the country here.
yeah,
Now we are coming out of it, and so yeah, you're right, Dale. The risk could come in that we could see this crop. It's not a disease; it's just caused by cold temperature. That's going to be something that you'll see happen more widespread.
okay,
But if we do see stripe or something like that, like some type of fungus build in, which can happen when you have too much moisture and the temperatures warm really rapidly, that could be problematic early on as well, because with lower prices, the farmer is trying to determine what they're going to throw at the crop from an input standpoint. And so you could see some abandonment in wheat if the crop doesn't look good as we
yeah.
work our way into the spring.
All right. Well, when you look at the weeklies of the three, just like the
Hmm.
daily look the best, corn looks the best. If I didn't know what the title was, I would look at this, where'd we bottom? 370. Call it $1.50. I'd be
Hmm.
buying a 50% pullback in corn.
Hmm.
Now at least you have a low to be wrong against, and this is the weekly moving average. It's a 50 week. So I would buy it there. Wheat, the weekly almost looks like it's vulnerable again unless we reverse. And the weekly in beans looks pretty good. We get over 11 is a pretty important area.
Yeah.
We could be trading 12 and a half back up here. So yeah, I think there's some opportunity. You know, what could cause a break would be risk off. If we get some continued risk off and a dollar rally because
Hmm.
of that, that may create a break for a buying opportunity.
I
Keep
think
an eye.
so. Yeah.
What do you think when you're talking to your clients? Uh, are you less hedged in the corn than other crops because of its performance?
We have been, I mean, yes, to a certain extent. With each one of my growers, it's kind of an individualized sort of conversation about, what they need to accomplish when it comes to cash flow, what they're looking for, what their targets are, in their mind. And so, we've had some differing circumstances on the farm. Cash flow has been exceptionally tight. Last year was pretty traumatic from an economic standpoint for the American farmer. You can look at the collapse in value, and a
Yeah,
lot of folks were caught off guard. We're dealing with a lot of recency bias, where it's like, okay, this happened last year, that's what's going to happen this year. And so you have
yeah,
seen the US farmer and the world farmer, the Chinese farmer is sold at a quicker pace than seen a year ago. The US farmer
yeah,
has liquidated a lot of their supplies. My growers now, we're kind of looking at how to maximize what we can out of our old crop supplies because of the aggressive farmer selling that we've seen. Now we have supply, and we want to, kind of compete with the commercials across the state here. But when it comes to new crop, yeah, I mean, it's one of those where you're towing a fine line. We did set our crop insurance price, so for farmers, they have a revenue floor that we can work off from. And so we have some corn that is hedged, not as much, you could say, as maybe we've seen in years past when the prices were higher. But it is more corn, more opportunities have been presented in the corn market, you could say, than in the bean market for sure. The wheat market, we did have a spike towards $7 late last fall that allowed us to get some stuff done early. And so that's provided us an ability to kind of sit here and just wait. And so
yeah. This
that's
is
what we're
a
doing for the most part.
when it turns, it's going to be big because this
It
is
turns quick. Yeah.
hell of a long basing period. You know,
Yeah.
so it's a big base over 7. You know, then you're talking 9.
And
Um, Let me ask you this: I've heard that Doge, in their efforts, has cuts have happened that have affected your industry, the agricultural industry, and that some people in the business, some farmers are upset about it. What is it that um, Doge did that's affecting the farmers?
well, it's been resolved since, for the most part, it sounds like. But there
Okay,
was, when they froze a lot of the spending programs, when we had
yeah,
especially the Inflation Reduction Act tied spending programs.
mm,
There were a handful of different or different things in there, different programs that the farmer could sign up for. Equip is one that was really based on conservation. It helps to cover the cost of a farmer, improving the energy and efficiency of their on-farm setup. An elevator or a grain bin and a dryer and all of that stuff takes a lot of electricity, and so there were some programs out there that allowed them to do that. Programs that were tied to the climate smart agriculture, which Trump has really rolled back, but that's more minimal till, no till, specify or variable rate application of inputs and things like that. And so there were some farmers that had a chunk of cash that they were expecting. That had been limited or held back. There were some worries that we would see the economic disaster funds that had been passed in the last continuing resolution be held back, but now it appears that that's not the case. They say that they'll send all of those funds will be released here, and so much ado about nothing, I guess, for a minute there, but it was a little upsetting. We have seen some pretty significant cuts as well, reported across a good portion of like the USDA, your offices, your field offices, the local. That is a little concerning, but at this point, I don't think anyone's really noticed what that means. But it is interesting, to think about, we saw Ag Secretary Rollins yesterday say that they're going to spend 500 million on biosecurity audits and things like that for these poultry barns. And I'm just wondering how we're going to staff that with the reduction in staff and some of these other things that we've seen, but they seem they'll be able to figure it out, I would imagine, here soon.
How many years before egg prices come down?
I wouldn't be the least bit surprised to see them be lower by the middle part of next year or even the end of this year. You can replenish poultry flocks relatively quickly. The biggest thing we just got to figure out is the biosecurity side of things. Obviously, these wild birds getting into some of these flocks and things causing issues. But I also think, if you Herbrooks, is one of the larger poultry egg laying operations in the state here. They supply a lot of the eggs to McDonald's and things like that. And they're really pushing for the vaccine. He thinks that that's going to make a difference. And so I know Rollins yesterday was kind of hesitant. There was a lot of conversation about the back and forth on that. I think the USDA had canceled the contract with Moderna that Biden had set up, so there's some conversation that we really don't know how that whole entire resolution will look like. But I would imagine now that we have all of the brain, all of the brain power and the manpower and are looking to allocate funds and maybe recognizing some of the ways that we could improve our biosecurity. Like we've got a local egg layer that they're spreading out their barns now instead of just having them in one location. You're going to see them all across the state. That way, if you have one get hit, you're not wiping out six full of, a million birds each or whatever. And so it's definitely, I think you'll see some pretty significant changes. I wouldn't be the least bit surprised to see egg prices down. I said the end of the year, it wouldn't even surprise me to see it by fall.
Okay, so Doge had initially cut a few people that were working on the vaccine. Is the vaccine project still ready to go?
I believe so. Yeah, I think there's a couple different that they've been working on, and I'm talking to a certain extent out of my wheelhouse here, so I better be careful. But it's one of those things where I think there's two different potential vaccines, or at the very least, I know they want to slow roll the rollout, which I think makes sense. I think there's still a lot of
risk.
Yeah, in COVID-19, the vaccine there has been brought up a couple different times in the fast rollout and yada yada yada. So I think there'll be a bit of a slower roll, but I do think that that'll be something that we need to see. There's a lot of conversation too. One of the biggest problems that we have with this whole bird flu sort of containment plan is that we're not allowing for any sort of natural immunity to occur. You're basically just wiping out if birds get sick, you wipe out the whole entire flock. And so there is a conversation about trying to figure out a better way to do that as well. So yeah, I think we're working on it. I think we've established what the problem is. I don't think it's an ASF thing. Like, there was an article at bird flu, look to China, China's pork to see why the bird flu or the egg situation is as it is. ASF was very different. And China's pig or pork production was very different. 7 years ago, they had a lot of backyard herds and things like that. Now they have the biosecurity.
They had to cull all that pork.
Yeah, they had a lot of, you had African swine fever that tore through the country. And so, it's not the same, though it echoes, and I do think we will see a lot of these farms now, especially with the big ones that have getting it. The Herbrooks of the world will definitely, if you lose several million birds at once, for us, it just impacted our local cash market and the egg price. We're paying double versus a year ago, though I won't complain because you can still buy 2 dozen for $9.
That's nice.
It's not too bad.
That's like $25 here.
Yeah. Oh golly, I can't even imagine. Yeah. So
a buck an egg almost.
It's crazy to me. Yeah.
Yeah. So when I'm making breakfast, I go $1, $2. Anyway, yeah.
But yeah,
anyway.
So I think we'll be able to work through it here. As we look ahead, we just gotta keep on keeping on with it, and I think we're understanding a lot about it, and so yeah, I'm optimistic.
Okay, well, uh, uh, RFK Jr.'s human health. So it's being kind of anti-vax. It's the Department of Agriculture that's making this call.
Yes, this one will be the Department of Ag.
Have they set up any facilities to take care of chickens that get autism from being vaccinated?
Not yet.
Ever met an autistic chicken?
That's like,
Uh,
oh,
uh,
I'm sure they
I,
take all kinds, right?
ADD or whatever. Anyway, Angie, your time, I believe, has come. We just need the dollar to break. And I wanted to ask you this. Let's wrap it on this. We have La Nina. La Nina definitely has acted in character here in California, with the fires, and we've only had one good storm. Okay,
Oh yeah.
the whole winter. And I remember La Nina years when it was dry out west, that into later in the summer, the growing season, that there could be weather problems like too dry
Hmm.
because of La Nina. Are people talking about that in La Nina as being a possible problem before harvest?
Yes. Oh yeah. I think it's on our radar. I think a lot of times we tend to we tend to cynically look at long-term outlooks. You know what I mean? One of those things where it's like, okay, yeah, a lot of you'll hear farmers say they can't forecast tomorrow.
Yeah,
Like, what do they mean? But you are seeing a lot of long-term extended forecasts that are pointing towards pretty decent dryness building in
yeah,
as you work your way into the summer, June, July, and August with some above
yeah,
normal temperatures in the Western Corn Belt. The biggest thing to look at right now that could have a huge impact on is we're going into the season exceptionally dry. Now, the best time to have a drought's obviously the winter, but we really have to watch that because we don't have the reserves to really handle an extreme drought, especially across some larger producing areas of like South Dakota, Nebraska, parts of
yeah,
Iowa. And so it's definitely going to be something to watch. We could probably guess that the USDA may struggle to reach the target yield that they released this morning, simply because it would be a new record. And so, yeah, we'll be definitely watching. Also, the La Nina weather pattern has a huge influence on what happens in Brazil during their second crop production
okay,
period. And so now we'll be spending the next 8 weeks basically watching Brazil really closely. There's some drought conditions that are developing down that way too. NDVI across much of Mato Grosso, where they're growing the second crop corn, is one of the worst, pretty terrible, far below average. And so there's a lot of things to be paying attention to. Definitely not anything to sleep on, even if we have some issues with Trump. He came out and just clarified here a minute ago. The Mexico-Canada tariffs are still set to go on March 4th. Reciprocal tariff is April 2nd. And he said he just added a new China tariff too, 10% on March 4th. So
yeah.
just
So
for
there's a
good
lot of
measure.
things out there, and one of our attendees, Galaxy, said that a lot of contracts were canceled. USA did a lot of buying of U.S. grain.
Yes. Yeah, you had there was a lot of buying there of US grain, different chunks of things. Now they weren't obligated to buy US grain though. So there were a lot of purchasing of grain that may have been made out of Brazil or somewhere else. Not an argument on any of it. It's just, if US grain was more expensive, they were given the option to source supplies elsewhere. And, the biggest thing I
Well,
see
they
with that,
probably didn't buy it anywhere because they didn't have the funds after it was
yeah.
killed, right? Right?
Yeah, you're helping, kind of negotiate trades amongst private companies, really, more than
Yeah.
anything in that regard. But it'll be interesting to see how that all plays out, especially when it comes to, USAID was really behind a lot of the rebuild that was taking place with um Ukrainian infrastructure that had been hit,
Yeah.
export infrastructure,
Yeah.
and grain infrastructure. There was, a lot of programs for adding bins on farms and things like that to try to keep the grain out of the pipeline when we weren't sure how we would be able to, export it or whatever.
Right.
And so, yeah, it's going to be interesting to see how all of these things play out. There's so many different moving pieces anymore. And you really can't tell what's going to have the butterfly effect in the whole entire sector until you get months down the road and all of a sudden you're like, oh, okay, well, it turns out Indonesia going to B40 was a big deal, or, you know, there's just so many different things that are going on. Trade gets a lot of the attention, the tariffs and all of that gets the big amount of attention, but
Yeah.
you know, there's so many other moving pieces, and we haven't even got into the growing season yet.
Yeah. Yeah. He's saying grain is rotting in some elevators and storage. And the peanut
Interesting.
farmers in Georgia are getting hit hard as well.
Yeah,
All I could say is, guys, you can't eat gold. All right.
it's true.
All right. So, you know, if you're emotional about what happens to the dollar and the price of gold, the price of energy, there's not a more emotional market and important market than the grain market. So they're good technical markets too. You know, I started trading them a long time ago. All right. So they're good technical markets. So I'll be looking at corn. If we get down, we get a pullback here to 440. And Angie is a great source. If you guys want to, if you start trading grains and you want, you know, uh, good info, you know, to find the right day for your entry based upon the news. Hard to do it all yourself. So Angie curates all that information for you. So check her out at consuag.net, and you can follow her on X at the Goddess of Grains. So,
Yes, sir.
all right. Well, Angie, I hope this is a great 2025 for you and your family and your colleagues and the guys who are out there, uh, you know, trying to feed America. So,
Me too. I'm
all right.
optimistic. I think this year will be much better than last.
Okay. Well, I like it. Let's end it on this note of hopefulness. And remember, don't just count your bushels, count your blessings. All
Yes,
right.
sir.
All right. So, Angie, great talking to you. Angie Setzer, everyone follow her. There's your grain gal and they're going to be important markets. All right. So that's a wrap. Thanks again, Angie. I'll be talking to you in May. We'll
Don't look
see how
forward to it.
yeah,
Yeah.
we'll see how hot it's getting out there in May, in June.
Yeah,
So
I'm ready. I'm ready for some heat and some sun. I can tell you that. So
okay.
bring on May. Thank
I
you.
remember the Midwest winters. Yeah. So that's a wrap, everyone. Have a great day. We'll end it tomorrow on TGIF. You could join the team in 16 minutes on the Morning Edge. Find a community. You know, I saw this saying that if you want to go fast, go alone. But if you want to go far, it takes more than you. It takes a community. It takes, you know, a partner. So, you know, learn to collaborate and find a community so you could go far, not just fast. Fast, you know, doesn't work in trading anyway because you have to be patient. And that's a wrap for me, everyone. Hope you have a good trading day. See everyone tomorrow. Adios. You're welcome. Everyone's thanking you, Angie.